Good evening, dear colleagues. As always, it's Sunday evening, and I'm Dan Strelkov with the ForexTimes project. Once again, I invite you to join the ForexTimes community, where you'll find unique forecasts based on data from the Chicago Mercantile Exchange, strategic target levels, triangle patterns as penultimate waves with the midline, serving as a strategic level, trading recommendations, and personal consultations. Join the ForexTimes community. You won't regret it. Today, we will be analyzing the euro, gold, and the Japanese yen. Spoiler alert, there's not much excitement regarding the euro, but gold and the yen promise to be interesting. Starting with the euro, based on data from the Commodity Futures Trading Commission, CFTC, we observe a decrease in buyers by just under 1%. The upward trend for the euro remains, but let's take a look. 1, 2, 3, 4. Over the past 5 weeks, the CFTC has registered a decline in buyers from this point in time to about this one. So it's been down, up, down. Right now, the price is in a small range, moving sideways. At this point, there's not much I can predict. As you know, dear colleagues, I prefer to trade from strong resistance and support zones. And at the moment, the price is stuck right in the middle of those levels based on weekly option contracts. So if you ask me what to do with the euro right now, I'd say it's easier to flip a coin. However, if you're eager to take action, I suggest looking at sell opportunities after this impulse correction. Set a pending sell stop order with a stop loss just above the recent high. If the correction continues, move the stop loss further. And if you always keep the same level of risk for your orders, reduce the lot size, as the stop loss size and the lot size are inversely proportional to each other when risks remain the same. So that's it for the euro. As I mentioned earlier, not very exciting. And now let's talk about gold, dear colleagues. Things are looking quite interesting here. In our community, we are currently in sell positions. We sold at the 2,678 level, and after the price dropped by 340 points, we moved our orders to break even. So right now, let's take a look at what's happening. If the correction has already ended, and it could have ended easily, especially given the situation in the Middle East, then we might see the continuation of the upward trend. We have wave A, B, and wave C. So if you believe that the upward movement will continue during the upcoming trading week, I suggest waiting for a bit more growth, then watching for a correction and placing a pending buy stop order to buy. However, I personally lean towards selling. In this situation, I believe we have completed the first impulsive wave, followed by a corrective second wave, and now we are in the third impulsive wave, which started with an initial diagonal triangle and ended in a classic 5-wave downward move in the 5th wave. Unfortunately, the 4th wave overlapped the low of the first wave, which means we can easily relabel the first wave as wave A, the second as wave B, and wave C. Since I'm inclined towards selling, I anticipate that we may soon see the formation of an initial diagonal triangle. This would be followed by waves 1, 2, 3, 4, and 5 for wave A of the correction, then wave B, and another opportunity to sell at the end of wave C. In other words, I don't plan to exit the current sell positions. Instead, I anticipate opening another sell position on this trading instrument. Now, let me explain why I think this way. If we take a look at the options contracts and the levels based on monthly option contracts, note monthly options, we will see that professionals have revised their expectations downward despite the growth of the trading instrument. The maximum open interest in put option contracts ahead of gold's expiration on Wednesday suddenly dropped. What's even more interesting is that the maximum open interest in call option contracts, which was very high, also decreased. Right now, the price is located within a strong resistance zone based on option contracts. And that's my first key point. Secondly, in our community, we have a section called Strategic Target Levels. Here, we identified a level at 2400, which was based on a combination of data from put option contracts totaling $410 million. But dear colleagues, professionals have written additional contracts at the 2400 level, amounting to $2 billion, $377 million, $625 million, and $383 million. Altogether, this comes to around $3.3 billion. In total, there are now put options contracts worth billions of dollars at the 2,400 level, which professionals are using to hedge their futures contracts on buying gold. This indicates that they strongly expect gold to hit the 2,400 level in the near future. These are the key insights. By the way, during the last trading week, professionals showed us levels of $373 million, $362 million, and $763 million, which align with the market maker's loss levels, the lower boundary of the range, and the HDV hedge delta value put levels. As you know, I really appreciate when these levels, such as market maker loss and HDV put levels, are reinforced by clean options contracts, as these levels tend to be hit by the price most often. Therefore, I am currently focused exclusively on selling this trading instrument. Even if the price rises, it will reach a strong resistance zone where I will once again look for sell patterns. And as promised, let's discuss the Japanese yen. After a rather long correction, we have finally seen a clear and obvious impulse. Moreover, this impulsive movement occurred from the market maker's loss level at the boundary of the range. On Friday morning, the price broke out of the market maker's loss range, and the market maker immediately responded by pulling the price back into the range. What's more, by the time of the weekly options contract expiration, the price had returned to the weekly balance level. The weekly balance is where the market maker makes maximum profit or where the option holders face maximum losses. So I recommend waiting for an upward correction and placing sell orders with a stop at 13,920 for the first target and the market maker's loss level of 13,630 for the second target. These are the three trading instruments for today. Unfortunately, the euro isn't showing any clear pattern and is currently stuck between strong support and resistance levels. As for gold, I've explained why I prefer selling, and we had a sell signal in the community. Regarding the Japanese yen, I also clarified why it's a good idea to consider selling here. Oh, and I forgot to mention that according to the Commodity Futures Trading Commission, we've seen a 5% increase in sellers and a 3% rise in the market capitalization of the instrument, reaching $45.666 billion. This means that sellers have entered the market while the instrument was rising, and we quickly saw the reaction in the form of an impulse. So why not continue this impulse, right? Exactly. Thanks again, friends. I once again invite you to join the Forex Times community. You won't regret it. And for now, I wish everyone a great evening and goodbye.